Hi, Leigh, and welcome to my Defying Gravity series. The man who's defied a lot of gravity in your time.
Hi, Helen.
It's so good to have you on.
Yeah,
Thank you.
great to be with you.
Look, I doubt there's that many people listening that don't know, but obviously had an amazing journey with Aconex, sold at 1.6 million to Oracle back in 2018. Lots of investing, and now you're going again. I'm just dying to dig into that with a new startup, Firmable.
Yeah.
Can you tell us a little bit about Firmable? People are perhaps a bit less familiar with that.
Yep, sure. So we're basically setting out to provide the best data set in Australia for businesses. So for B2B data, anybody selling to other companies. And this really comes from, way back at Aconex, we needed good data to know who our customers could be, our prospects, and also have data about our customers. And we've seen that with a lot of the companies we invested in, they just need better data around their potential customers. So it's trying to fill that gap in the market. We just don't think Australia's been well served with strong, high quality data providers.
Yeah, awesome. Sounds great. I can think of a few companies I work with that want it. All right. Tell me, I have to start with my most curious. What made you want to go again?
I think, well, it's not I think, I know. I like building businesses, and that's what I've spent most of my life doing. I was at McKinsey for a couple of years, and that was still involved in advising businesses before I then started Aconex and spent 20 years building a business. And that's what I enjoy doing, solving a problem around or all the problems, there's lots of problems to solve around any business, how you go to market, what your product looks like, how you build your team, what resourcing looks like, how you fund the business, all those sorts of questions. I just enjoy solving them and building a business. So and I think possibly also I'm on quite a few boards, and I enjoy, I wouldn't say I enjoy every board, but enjoy most of those boards. But I just didn't want to do just board work. To me, that's, doing a few boards is fine, but spending my entire time on boards and investing, so we're also investing. But again, I like investing, but I just need to be building something as well. So
Yeah. And was it important to take that break? So, it's a good 6-year break.
yeah,
Did
I'll
you need
probably
that?
that's 4, I guess 3.5, 4 years. It wasn't a break from a work point of view in the sense I kept working. It was a break
Yeah.
from building a business, and that, I think, what it really showed me is how much I actually enjoyed building businesses. Building a company, and so and look, a lot of the startups we work with, we can help out with that, and I enjoy doing that. But it's just when you're doing it as as a singular focus, and you've got control over a lot of those decisions. It's just quite rewarding. So we'll see. We'll see. I'm doing it again with Firmable, and it may not be another Aconex. Hopefully, it's way bigger than Aconex, but you never know. And you've got to accept that not every business is going to succeed. But but I really enjoyed the Aconex journey for all the ups and downs. And if I can have some part of that again and get to work with great people building another company, that's how I want to spend my time.
Yeah, beautiful. All right, can we go on the Aconex journey for a bit as well? Just thinking back, like 20 years, you listed, you sold, but you had plenty of rounds of capital and so on for that. What was the hardest thing when you look back on that journey?
There's lots of things that went wrong over the years, and we were doing it without any pattern, I guess. We were building a SaaS business that it didn't have a lot of, one of the big contrasts with Firmable is just the amount of tools that are available to build a product today. You can plug in different SaaS products, but we had to build it all from scratch. So we're sort of learning as we were going. I think, lots of moments. I think probably the hardest ones were, we almost went out of business a couple of times. We were very close to the wire in terms of raising money. Raising money was tough, again, different environment. And so we had to raise money offshore when we wanted to raise serious amounts of money. And it was just a couple of times we were within a month or two of running out of capital. So that's, incredibly stressful. But I think, the ongoing challenge, there's always I mean everything. Customers. The customers are great. They build your business, but if something goes wrong, you've got to respond to that. I mean, there was always things that we were having to respond to. But I think the most stressful was those moments where you think it's all going to explode, and you have nothing. And it wasn't so much about. It was less around how. Wouldn't have been great for me, but the thing that really made it stressful is you've got a whole lot of people in your team, and we got pretty close to the wire when we were probably, I mean, various stages, but the biggest we were before we raised money in 2008, which is sort of our last round before listing. Probably a couple of hundred people. But that's a couple hundred families that if we go bust, that's 200 people have to go and find another job. And it was quite tough. We were quite lucky actually when we did raise capital in 2008 because it was right before the GFC, and it was stressful raising into that environment, but it would have been a hell of a lot more stressful if we hadn't raised. If we had been 2 or 3 weeks later, we might not have got any money in. So, look, we would have probably found a way through, but it was just we were right on the edge in terms of growing fast, great growth rate, but churning through the capital to build the business, and really, didn't have enough runway. The other thing I'd say is part of that we brought on debt, which was really dumb back then, and the reason we had to raise quite quickly, we weren't about to, so in that particular instance, we weren't about to go out of business the next month, but if the bank had called up the debt and we'd started to breach some covenants and just things weren't quite going as we planned. And so we had to basically replace the debt with a capital raising. So it's quite an involved process, but it was just stressful. You sort of.
Oh, yeah. You've actually blown me away that you were ever that close when
when we had a
from
few
the outside,
points,
it's such a success story.
Well, but I think that sometimes, it's like a duck on the feet are going underneath. A lot of times from the outside, things look a lot better than they are on the inside. And I'm always very open to say, talk about some things we got wrong. I think it's good for founders to understand that businesses that look like things are going well, you just don't know. I always used to think in my position, I must be the only founder that's making these mistakes. It's only when you later speak to people, or perhaps hopefully during those incidents, where you realize that other founders have been through or going through similar things. And it's why it's so important. I mean, these sort of conversations we're having, this conversation with you, is just really important for other founders, just to know that things will go wrong and you solve it. But things aren't in every other business. You're rarely the worst one out there. So, but you can feel like it when you've got problems mounting up, things are going wrong, and you think every other founder's getting it right. It's quite tricky. So
massive. No, that's amazing. I have to do a follow-up on that because that's fascinating. And there's parallels today, right? Like, it's not an easy environment to raise money in at the moment. There's, I'm sure, a few founders in that situation. What's your advice to them?
Well, I think that we always had this concept, and partly because we'd had a couple of instances where we were close to the wire. I always wanted to have enough. I always had a plan to get back to break even, and not that it always worked out perfectly, but I felt and even one or two of the times when we were close to the wire, it was probably that we had the plan and we didn't quite execute against it as well as we thought. But I think for a lot of founders, getting their business to a position where it's sustainable. So, grow by all means, raise money, go hard, but always have your sort of plan B, back pocket plan to get the business back to break even. And I think if you're cash positive, and you can then ride out a lot of different cycles. And I think a lot of the companies we've invested in have been through a very good period where 2 or 3 years ago it was relatively, and it's never easy to raise capital, but relatively easy to raise capital compared to other times. And it's a lot harder now. So we've encouraged all of our startups that we invested in just to to get themselves, and even bigger companies, even if they're scaling up, just get yourself to a point where you can always get back to break even. So we call it porpoising internally. Take a breath, go down, you can come back up for air, but you're never going to be stranded. You've always got enough to get back up. So
because there's a more aggressive view that's not going hard enough on growth, right? But you're saying you just had a plan to. You're not always cash positive, but you knew you could get.
We were never cash positive, really. At Aconex, I mean, when we listed, I guess we were, but up until when we listed, we were always investing in growth. But we always came back up towards break even. So we'd raise money, go hard, but as we started to come back towards break even, then we'd raise money and go back again. But we always knew broadly, and again, it wasn't always perfect, but particularly as we got bigger and as we're scaling the business, we always had this plan to get back to break even in our back pocket. And sometimes we execute on that plan. So after the GFC, when we raised money, we then went into, wasn't quite hibernation mode, but we pulled back significantly on our investment in growth, because it made no sense to be investing aggressively when, particularly in our industry, in construction and infrastructure, a lot of those projects just stopped in the GFC. So we had to be able to pull back and kind of hold those resources and get the business to a sustainable position.
Yeah, interesting. That's really great advice. All right. And when you look back in terms of building your team, like I know you had some strong co-founders, and you're working with them again, is that right? Like,
yeah. So yeah, quite a few of the Aconex team are involved in Firmable. So actually,
nice.
and not just even we've got some of the teams in India. We've got quite a few people that worked with Aconex. So it was nice to be able to get some of the band back together again.
Yeah. I'm getting jealous. It's great to work with the people loved working with, isn't it? So when you think back, do you look at certain hires, like as you scale, the patterns I'm seeing across all these interviews and some of the companies I've worked in is there's some key moments where you level up the exec team, for example, that kind of people that have seen the future is what I call them. Were there people like that you just look and go, well, that person had to join to get to that next level? Or do you have more of a journey of you all grew with it? Can you sort of talk about that and the team that did it?
In some sense, both of those. We had key hires on Aconex, but we also had a lot of people that did grow with the business all the way through. So, for example, our head of customer service, head of customer success, Shani, she started with us as a trainer way back in some year 2 or 3 of the journey, and she's only just left Oracle recently. So she in Oracle acquired Aconex, so she went through and grew through the company. And there's quite a lot of people like that. We had a lot of people go into our tech team who had, one started on reception as an admin and then ended up being a product manager. There's lots of different examples. But also, there were some really key hires. So for me, I'll go to 2 of them. For me personally, getting our first head of HR, and why that was so important. We're probably about 50 or so. And when we hired Karen, she came on to sort of from a recruiting point of view, but also an HR point of view. But the thing I noticed immediately was just I had been doing a lot of that, and Rob probably as well. But as a founder, you sort of founder CEO, you end up doing a lot of the HR when you don't have an HR person, and it just allowed us to scale up our people organisation for one. But secondly, also have somebody I could get advice from, because particularly as a founder, and obviously different in Firmable, but most founders haven't done it before. So this sort of learning, but to have trusted advisors. So I found that particularly having strong HR leads. So we had, so Karen was early on, and then more recently at the end, having so Alona Charles came on, and she was again a very similar sort of person. From my point of view, the business scaled up, and so she was quite senior when she came and joined us, but somebody I could rely on and trust for advice. Then probably the other person I'd call out is Paul Perrott, who has joined me in Firmable. So we've founded the business with Karthik, who is our technical co-founder. What Paul brought to the business, which really helped me, was, we both had engineering and consulting backgrounds, but Paul was just very operationally focused and was able to build systems and teams. So very good at hiring, very good at building the processes and systems that allowed us to run the business and scale the business. And while I did a little bit of that, but he was just great at that, really good at that. And so what it meant that, and with Rob, the other founder, or the other co-founder, Rob ran product, but you've got these key people that can, take big chunks of the business and run them. And what Paul did was basically run all the operations of the business. And so it meant that I could focus on what I needed to do. Sometimes that was raising capital, a lot of sales work, a lot of marketing, etc. But just had somebody that could absolutely trust to build the systems, the processes, to do the hiring, to build the teams, to really enable us to scale up. And so Paul went all the way through the journey. That's one of the reasons why starting Firmable with him was such an easy choice, because he sort of complements some of what I do, and we've got a pretty similar outlook on things, so it's good.
Yeah, awesome. That's so common, like a systems thinker
Yeah,
that kind
yeah.
of starts building, works on the business while you work on the growth kind of.
Yeah, and so I was sort of a bit more strategic, I guess, and so I had sort of would do, and we just complemented each other quite well. And then, yeah, Rob complimented us in terms of, he was very strong on the product side and had a real vision around that. So it was, yeah, it's just getting, I think part of it is actually recognizing where you, not only where you have strengths and don't have, strengths, so strengths and weaknesses, but also what you want to do and what only you can do. So sometimes as a founder, you might want to do things, but maybe it doesn't make, even if you're good at it, it doesn't make sense for you to be doing them. And in this case, yeah, I probably could have done some of that, but Paul was better at it, but also freed me up to focus on things that only I could really do, which is, things like raising money, setting the vision for the business, etc.
Nice, nice. Yeah. Your magic trick. It's key.
Yeah, it's like knowing what you're good at. Knowing what the other thing is knowing what you. One of the mistakes I sometimes made earlier on was sometimes doing things I didn't enjoy doing as well. So, and there's always gonna be a bit of that, but you've also got to have some things you actually enjoy doing. And so, while I found it for a while, I was picking up sort of things that other people wouldn't do or couldn't do. But it's also important to have some activities that energize you. So if you like marketing, or if you like sales, or if you like getting the product, doing some of these things that energize us as well.
Yes. Yeah. So that would be, I mean, that's really awesome delegation advice too, that
Yeah.
you find the things that give you some energy, especially for a 20-year journey. Eh? Was that more so later, or?
Yeah, I mean, early on you do everything, you have to, but it's, as we grew the company, what I found at one point is probably that it was also a thing, you've got to be able to build you mentioned 20-year journey, build a sustainable cadence that will last you over the long run. And I work with an executive coach, and one of the things he often talked to me about was paper cuts, just the things that just drain energy. So little things that can be, and just either, maybe it means it should be delegated, maybe it means it's not a problem, you don't have to worry about it, or fix it, get in and put a system around it, but just take away those little things that just sap energy out of yourself or out of the management team, executive team, out of the company. So yeah, so quite good advice, and we sort of got better at managing those things and just frustrating.
Yeah, that's awesome. Paper cuts, I like it. It's a good analogy. All right. At a personal level, I don't know, maybe you didn't have it. It sounds like you did a great job of kind of pulling the right people around you. But do you remember any real breaking points? I mean, obviously that capital raising was probably one, but maybe at a more personal level, were there times where you just went, I'm not sure I can do this or want to do this, or and what did you change to keep going? Do you sort of reflect on any of?
Yeah, we had a pretty fast growth into the Middle East, and that was challenging, just to staff up, to get the team going there. So we went from zero to, I guess we had nearly 150 odd people in the Middle East before the GFC. So this is around 2007, 2008. So in the space of 2 years, I think it was about half the business before we then, we had to pull back with the GFC. But yeah, it was around that sort of 200-300 people in the business, and about half of that was in 125, 150 in the Middle East. But that's just hard. We were getting people to, we had to hire people to run the business there, which was growing quickly. We were burning a lot of capital. We had quite a lot of misses on the hiring, so we had to rehire people, and it was just challenging building the team that fast. And so that was a bit of a breaking point. I think we were we were able to get through that, and then lots of things. It wasn't just around people. We also had things like our system. Somebody pulled up a trawler or something, pulls up the internet connection to Dubai, and all of a sudden half the capacity's gone from, I think the main line was Singapore to Dubai. So we had people, just the latency of the internet is back, back in 2007, 2008, so a while ago, people just couldn't get to our servers. So or with any speed. So we then had to very quickly spin up servers in Dubai and this is all pre AWS. So there's no way we could just spin it up quickly. We then had to find another data center. We literally had somebody hop on a plane and carry the servers over to Dubai. So there's all those things where we just had to respond quickly. And I think within about 2 to 3 weeks, we were able to spin up a data center, move and just all hands on deck trying to get an instance set up in Dubai. So lots of those sorts of things where but sometimes those are breaking points, but they're also quite they're also rallying points for the business as well. So
Yeah.
we rally everybody around that, and the sense of achievement that we probably were the only SaaS business in the time that had an instance in Dubai. But we had no choice. So we sort of blazing a trail into that market and doing things in a way that were quite different from others. But yeah, so it was that, you know, I mentioned the capital raise, that was tough. I think the toughest thing about that back in 2000, so this is all around that time, 2000, so we were growing quickly in Dubai, and across the Middle East, you know, burning a lot of capital, trying to raise money at the same time. You know, we didn't know we'd make payroll. I was just, everything was happening at once, and we're sort of,
Right.
and we sort of got our way through it, but it felt like every day I'd wake up and there'd be some other problem to deal with. And sometimes that's good, you know, I like solving problems, but when there's too many and you feel like you barely solved one problem before, the problems were arriving faster than we could solve them at one point. Just felt like they kept loading on. But, you know, it's a bit like a chocolate elephant. You've got to start somewhere, one mouthful at a time, and we just sit back and, okay, well, we'll solve what we can and we'll move on.
Yeah. Do you like from that time, because, and God, there's some founders I'm working with at the moment that are there, like one step forward, two back, you know, tough periods at times. Is there anything you learned to sort of give them advice at those moments where it's just so hard to make headway?
Yeah, I think sometimes you can feel like you should, you know, this sort of imposter syndrome people talk about. I'd sort of encourage people to, acknowledge that and recognize it, but often nobody else knows better. It's not like there's some, there's some perfect answer out there, and particularly when you're building, when you're scaling up a business, when you're in a new industry. You know, in the case of Aconex, it was brand new, and nobody built a SaaS product into construction. We were doing things for the first time, and we gave ourselves, it's the right way to put it, we allowed ourselves the ability to make mistakes. Actually, one thing we did do at Aconex, we were very strong on saying to people, make mistakes. So we expect you to make mistakes. We're all going to make mistakes. We're doing this for the first time. And we wouldn't beat ourselves up about making mistakes. We just expected that they were going to happen. Obviously, we wanted to fix them, but it was this sense of giving people permission to have to move forward, decide as best you can. Nobody else has done this before. Problem solve it, but make a decision, move on. And if you get it wrong, we'll come back and fix it. But don't sort of overly worry about, don't slow down too much to try and get the perfect answer. And so it was part of our culture, this sense of, people were able to make mistakes and move forward. I mean, we sort of had this sense of making decisions, solving things relatively quickly, and then, keeping that pace of growth of the business up. And if we made a mistake, we'd fix it. We wouldn't sort of, some business can get sort of analysis paralysis where they overthink everything. And, half the time just making a decision and moving forward is half the answer. So
just act.
Just act, get on with it and iterate. So we were quick at iterating too. So we didn't beat people up if they made a mistake. Everybody would accept and own their mistakes. It was this sense of, if you made a mistake, better that people own it and acknowledge it quickly and fix it, rather than trying to defend a bad decision. So that's why we gave people, the permission to be able to make mistakes and move quickly.
Yeah, brilliant. All right. Did you ever regret listing on the ASX?
No, not particularly. Although there's times when it is tricky, and so it's sort of a yes and a no. So generally, no. I think it was a good thing for the company. I think you've just got to accept when you list that it's going to be a bit of it can be a roller coaster. And what happens is the highs and lows get accentuated. So when you're running a private company, you have your highs and lows, but they're sort of somewhat internal. And your investors might be unhappy, whatever, but that's a limited set of people. When you're public, the highs are high, they're higher because you've got all of a sudden everybody telling people how great the company is, and you have this external validation. So the highs are much higher, but then also when the market runs against you, and we went sort of through both, through multiple cycles with Aconex, but when the lows, if something's going wrong in the business, you've got a lot more scrutiny on it. So that can be tough. And I think, probably the only other thing we when we sold, I didn't really want to sell the company. I've been pretty open about that. I was very happy doing what I was doing. Partly, and I've worked that out again, as I said earlier on about going back and building another business. That's kind of what I like doing. I was very happy to keep running Aconex for another 10, 20 years until the board didn't want me to. But it was, as a listed company, we had no choice but to sell. So once, and Oracle, a good acquirer, great company, but once they put in an offer that was high, it was significantly above what we were trading at. So we really had no choice at that point, but to do the right thing for shareholders and to sell the company. So I don't regret that we listed, but it did make it a little harder not to sell. Like if we were private, we could have just, to some degree done, had a bit more control over that.
Yeah, interesting. So it almost it kicks off that path, doesn't it? That
it just opens that possibility. There's quite actually from a founder point of view, there's a few things that one, when you're listed, again, because it amplifies anything that's happening in the business, that I think your longevity as a CEO probably gets shortened. So it's just some companies in the US, obviously, that with with founders having voting control of businesses through differential structures, share structures. It's a bit easier. In Australia, you can't do that. So your shareholding is what it is. But if the rest of the shareholder base doesn't want your CEO, you're not going to be there. So I think I recognised when we listed that I'd keep running the business as well as I could, and as long as the board wanted me to. But it might also accelerate the time frame in terms of where I would run out of the time would stop on me being the CEO. But then the other thing, I think it just means you also potentially lose control if there's an acquisition like what happened to us. It's not that we couldn't have pushed back on it, but we felt an obligation, and as a listed company, was any director, even unlisted, you have a responsibility to shareholders. So we felt that was the right thing to do, is to take that offer from Oracle. But personally, I didn't want to sell, but was happy to go through the process and do and complete the sale, because that was what was in the interest of our shareholders.
Yeah. Would you do it again?
I should say that there was a big positive of being listed. When the market's behind you, it's easy to raise capital. So we acquired a company in Europe, headquartered in Germany, and that was I think $130 million acquisition. But raising that to 120, 130 million was very quick. So with the markets behind you, being listed is great. So it's pros and cons. Would I do it again at the right time? Yeah, I think there's a problem more generally in venture if we don't have the largest companies eventually being listed. It's just, and what we do is second quarter, we're providing secondary into the market pre-IPO, and one of the reasons for that is to help with liquidity where companies they're waiting a lot longer as private companies, and that's fine. I think it's good not to rush to the market. And I'd say to any company who's going to go to the market, just wait. You don't, whatever size you are now, if you wait a year or two, it'll be better. But there's also a point where I think it's a good structure for people to be able to buy in, sell out. It gives you, you have the shareholders that want to be with you. And so for Aconex as well, it was an opportunity for our early investors to decide whether they wanted to stay or go. But we could do it. They could choose that. We didn't have to do it as a blanket secondary or do it as a process that we were running. It was just obviously the market's there to allow people to do that themselves. So it was so a lot of pros. Would I do it again? Yes, at the right size. But I'd probably, and where Aconex was, probably again. But for most companies that we invest in, it's a long way down the track for them.
No, cool. And what have you brought from Aconex into Firmable? What do you think? There's anything you're really doing differently in your build this time?
A few things. So firstly, as I mentioned earlier on in our conversation, just the ability to plug in products. So if we don't have to build it, simple examples, at Aconex, we built our own billing engine because there's no Stripe back then. Now we've got Stripe. We built our own user management system. We use a product called Clark. There's no AWS, so we pay our own service. So anything we don't have to build that's non-core, if we can pull a SaaS product off the shelf and plug it in and integrate it through the APIs, we'll do that. So building a lot less build internally, I think, is one thing. And so that's different and better. We like that. Also, fully self-service sales model where people can sign up, have a trial over a couple of weeks. We'll support them and help them. But if somebody wants to, they can sign up, go through a trial process, look at the product, and become a customer. We don't have to, so Aconex was much more enterprise-led sales, and for certain markets, you've got no choice. But construction, in the construction industry, people weren't sitting around on site waiting for the next collaboration tool. We had to go and tell them about it. So different businesses will have different approaches to market, but certainly with Firmable going for much lower cost, high volume approach. But then there's some things that are very similar. We want to, obviously we've got quite a few Aconex people that have come into Firmable. We'd love to have a similar culture. I mentioned that, moving fast, making mistakes, trying things. We know we haven't got everything perfect. We've got the product to market as quickly as we can to get feedback, knowing that we're going to have to keep doing it out. There's a lot of that sort of comfort with ambiguity, comfort with speed, comfort with things not being perfect, getting the product out there, all those sort of things that we did with Aconex. A lot of those are similar. So yeah, a lot of similarities, but where we can go faster and do it with less effort, we'll absolutely do that.
Yeah. Do you think it's a double-edged sword, the ease of building product, like all these tools? Like sometimes I wonder in some of the markets I'm working across, like it's so crowded because you can get a marketplace in a box, but actually marketplaces aren't efficient unless you've got huge market share. Like these sort of. Do you think
that's right. The barrier. Yeah, I agree. I think it's almost too easy. I think in our market with Firmable, we still had to assemble the data, so there's a lot of work getting. So the effort for us, which you couldn't circumvent with another product, was assembling the data sets that we're providing to our customers. So that's quite and we raised a reasonable amount of money, and that's actually one thing that wasn't a bit easy with Firmable, raising money. I mean, Aconex, it was hard yards raising money back in the early 2000s, but with Firmable, there's a lot more money out there. You've got multiple VCs that have $1 billion plus under management, so it's a very different environment at that point of view. And so we needed some capital, but and mostly it was around the data piece. So that's still something that there's quite a big barrier to entry there to get a quality enough data set to be able to go to market. So we've got some two problems, if you like, with go to market. You've got to have minimum viable product. We also need a minimum viable data set to get to market, and that means it's not easy for somebody with zero funding to sort of get into the market. But I think you're right. Like it's very easy to spin up a product. I think the challenge now is not so much around the product side, which gets easier in some senses, but you still got to have a very good go to market. I think some people, some founders have, I think, incorrectly a view that if you build a great product, you'll have a great business. I think you need to build a great product and build a great sales engine. If you don't sell it well, however you're selling it, whether that's in the case of Aconex it was enterprise sales, in the case of Firmable, it's much more product led, but however it's done, you've got to build a great sales engine to have a successful business. And I don't think any business that's ever been successful, maybe with the exception of Google, or there's one or two, but most of the best companies in the world have very strong sales and marketing engines.
Yeah. Product-led growth maybe underplays marketing role.
And that's the thing. So, and actually, the way we think about it, certainly with Firmable, it's the product. The product is I think, again, product-led growth sort of misses the point sometimes. It's not just about having a great product for the user. Our entire marketing and sales function, we build products for that. So actually, think about the product. There's kind of three products. There's the application, there's the data sets that we're pulling together, and then there's the sales engine that we've built as a series of tools. So it's but something that, if you build a great widget, people come use it. Well, you've got to build all the engine to get them to the widget to be able to use it. So it's just very interesting. But I think there's all, and the other thing I say, some industries you cannot possibly only have people coming to you and finding you. You've got to and not just creating demand, but you've actually got to speak to people and you've got to sell. So and we see that a lot we tend to invest in a lot of B2B SaaS, but some of them quite a bit in construction still, and most of those companies have to sell. They still have to send a person, or at least get them on the phone or whatever it is, but have a conversation.
Yeah, awesome. That's fascinating. All right, thank you so much gold in there. Last question, what is your number one piece of advice for a scale-up founder?
I think probably going back to, from a founder point of view, knowing, be really purposeful in what you do and what you don't do and how you build the team around you. So really getting clear on that. I think, and again, I'm taking that from the point of view of a scale-up founder. So I'm assuming at that point, the company already has product market fit to some degree. They've already got a team going. They've got their sales engine starting to work. So to scale a business then is really, as a founder, I think you're recognizing that founder CEOs, and depending on the structure of different companies, you might have multiple founders, etc. But they're critical to they're the leverage point in the business. So being really clear around how you spend your time. I mean, the only thing we can really prioritize as founders is time and resources. And the time of the founder is so valuable, and particularly in scale-up phase, because it's easy to just say, well, I did this in startup phase, you keep doing it. You sort of got to reinvent yourself at various stages along the way. And so, for example, for me, I did a lot of our early sales work. I did a lot of our early selling. It was hard, but I also realized that there's people who are better salespeople than me. So bringing them in, me stepping back a bit, taking on others. So really think about where you spend your time, how you build the team around you. And yeah, I think that's I went from running a team, having individual relationships with our key executives to really trying to build a team that wasn't a hub and spoke where it all relied on me, but the team could actually operate ideally without me. I could pull myself out and the business would continue to operate. And I think, that's part of, again, scaling. Like I couldn't do everything. There's no way I could do everything. And I couldn't run everything across the team either, because I just didn't have the bandwidth or capacity to be able to deal with everything that was happening. So, again, making a team that if there was a marketing and product issue that they needed to resolve, that those two executives would talk and resolve it, and only bring me in if they needed, some additional input into it or whatever. So it was, but I think that was something that we really worked on a lot on our scale-up journey, is how we spend our time, how we build the team around us, what I did, what I didn't do, etc.
Yeah, brilliant. That's awesome. Thank you so much, Leigh. That was
Thanks, Helen. Great to chat.